Yesterday I was off the desk for almost the entire day. I was back right for this final down move here from 262 to 261 or something like that. Just looking at the last couple of weeks price action, and obviously you can clearly see the larger range that's developed. We have failed a bunch of times now to close above 265. Although the last few days we've gotten up to that area. Obviously this was the day of consolidation after the big bounce. We gapped lower on trade fear. I think it was trade fears this day here on Friday. We did rally back up to prior day support. It was a great short yesterday. Certainly if I was around for this coming back to this area, I would have shorted it again. Would have been less confident in this size of a down move from there, but as we continue to have trouble closing above, you got to put that short on. I'm sure everyone listening right now did that, so nice trade. China overnight basically said they were going to lower import tariffs on U.S. cars, which currently I think is 25%, which is high. They also addressed intellectual property concerns, which really is the real issue, right? With the U.S., our most valuable product is our intellectual property, whether that's on the technology side or the entertainment side, and that's the one way we could really make a ton of money selling stuff in China. And it's been a problem for decades. So it'll be interesting to see if China really addresses that issue. But in the meantime, the market has gapped into this area where we failed the last few days. So certainly playing it short again is fine. Sometimes, though, third time is the charm. So I would say, let's go like this. Let's put some support here pretty close below 264. Let's say this morning we start to sell, and then we really can't muster much of a sell-off, and we start to move back up again. I will start to think more constructively for upside, and then bigger time frame. Just like we haven't been able to see consecutive closes below 260, and if we had consecutive closes below 260, you'd want to get very aggressively short the market. If we start to see closes above 265, I think that brings 268 to 270 into play very quickly. And so I would position myself accordingly, especially using options where you can just kind of define your risk for really good upside. That's certainly the way to go for those of you who are looking to capture larger moves. Let's take a look at IWM. Okay, so IWM, we have this 152 as potential resistance. It looks like it got above there by the mid-morning and started to hold above. One little fake red here, tried to make people think I guess it was reversing, and then made the new high before actually reversing with the SPY. So this is pretty tricky, especially the way that I'm just going to look at these wicks here. There were clearly sellers above 152 and a quarter. So this red bar here maybe started to get some people short, made the new high, and then came off. It's tough. One of the things you need to learn to do also is to really give an honest assessment when you're reviewing your day's work and kind of how you traded and how you viewed things. It's very easy in our minds to recreate saying, this is the way I should have traded this, based on this and that. It's harder for some people to basically give an honest assessment of how their thought process at the time, and then also reviewing it because I wasn't here, like how they would have viewed this. And it's starting to roll over here after these wicks. I think, this is a good chance this is going to fail here. Certainly when they have the strong green bar, I'd be like, whoa, this could go up, here. Maybe even would have been caught long here for a few minutes before the hard reversal. And then that just comes from a consistency of process, understanding what your setups are, how you view price action, how you view important support and resistance levels, which really is the most important concept for short-term traders, understanding where buyers and sellers have positioned themselves on multi-days and intraday timeframes. That's going to kind of form the basis the foundation of your trading plans, your trading plays. That's important to your review process and getting better. So just a quick little lesson on that. Okay, so if we consolidate between 152 and 152 and a half today, especially tighter than that range I just mentioned, we break outside of the range, I would look for a move again from there. Let me just zoom out and see what it looks like bigger. It's similar to the SPYs, a little different because of this stuff down here. It's also not as close to recent key resistance area. So it's actually, it looks like to me IWM starting to act a little bit weaker than SPYs, where it was acting a little bit stronger for a while. The VIX, the actual VIX, not the VXX that we trade. I just wanted to point out something I noticed yesterday, which was it can't really hold above 25. It's gotten up to 25 a bunch in the last few weeks, even like if it closed above it one day. It just keeps on failing when it gets close to that. There's definitely support at 20. We did spend a couple of days down here closer to around 19, but it's a pretty nice range we're developing here in the VIX, and so you should use that as you're trading the market. All right, let's take a look at the couple in-play things today. First one is Watt. If we go back on the daily, you can kind of see last time, I think we were really looking at it, was this gap here. I feel like we had a long play above 16 or something like that. Certainly didn't expect it to double to 32. Became more constructive on it after it just had such, follow through from this big up move here, but it erased the entire move, then consolidated and came down and did a retest of the gap. It did hold it for a while. But coming into this news today, and it's above 20 now, it's been a weak stock. I mean, you can go back to the high here and kind of see if it failed to break back to the upside of this downtrend. And so now it's gapping up to 20 this morning. I think I put that as an inflection, right? So we can use 20 as an inflection. They got FCC approval of the big thing in the next few years is you're just going to be able to have your phone with you wherever you are, and it's just, there's going to be this wireless charging where they'll just charge during cafes, you're sitting around, whatever, at the office. And so there's some companies working on that. Really the stock price is dependent on how big, does that trend really take off. So looking at it this morning, we go back over the last couple of months, and you can kind of see 20, I put on the sheet, 23, I guess is this high here, and then below that 22, 22 and a half. So I was hoping that on the open it would spike up to this area here, maybe fail, and then we could see our buyers willing to step in and hold it at higher prices than 20, maybe make a higher low. So that would be kind of how to view it on the upside. On the downside, if the first move is down, you're going to see if it bounces from this area here from 20 to just below 20 right here. So normally only trades 1 million shares. If we look at the daily, we know that when it was really in play, when it went from 16 to 30 in those 2 days, it traded, 20 million shares. It's not going to trade that much. It could trade 4 or 5 million shares. It's just been, I'd say 4 to 6 million shares if this news really gets institutions involved. Just recently, it's done low volume. The next one is SPPI, and the news on this one was good phase 2 on lung cancer drug. So, earnings season's about to start. Next week, it's going to start to get a little bit busy. We've got a couple of big names, I think, reporting in the next few days. But until then, the news flow the biotechs seem to kind of dominate until earnings season kicks in again. So what do we have? 18 and 19 resistance. $16 support. It's been in a downtrend coming into this news, so that's kind of maybe some people leaning the wrong way. Any type of flush. Oops. to this area here, I'd be looking to see if it's bought, and we can close up in this area here. That would be interesting.
So for scheduling purposes, President Trump will not be attending the Summit of Americas in Peru.
It's done 80,000 shares, at 7% of its normal average daily volume. Definitely, it's being bought here at 17. So I'd say even on the open, if it does a quick drop, see if it only drops a little bit below that 17 and gets back above, that would be another good long idea trade for the open. We're just long against 1680 with the buyer here at 17. ECAD. So we need to talk about this some more. I guess we don't have that much time now, so maybe I'll do a special lecture or webinar on this. But I really think something that would be very helpful for the people who aren't doing this, especially developing traders, is kind of taking the support and resistance levels I put in the written game plan from the pre-market and using those and kind of seeing how stocks trade off of those levels. And so this quite often we'll see if you have support levels. I think 17 was our support level from the morning meeting yesterday. And if it breaks below, the first thing to do is when it comes back up, look to put on a short trade. And then vice versa on the resistance area. So, and I think in the other second day play, it shows it even better. But this was clearly a weak stock yesterday. Right at the end of the day, it did get some buying here and some decent volume, and it's gapping up. But again, 17, if it's holding below 17, you have to be cautious on the long side, and certainly being short is okay, definitely. So let's go to the second one, RGNX. So this one, let's see if I still have it marked up. Yes, I do. Okay, so this one, I believe this was S1 right here. So right on the open, this was R1, resistance 1, $35, right, I think. It got below support 1 right on the open. It held at $32, and when it got back above it, it traded all the way to R1. And then when we noticed R1 started acting as support, then it had a hard down move below it, and so now we can start to use this. If you get a quick pop back up, you can short into it for a move back down to support 1. Kind of like we saw the prior day, and I forget what stock it was, but there was a big stock that moved up and down from R1 to support 1 a couple of times. But it comes back up here, and there's clearly people starting to sell it. You play for the move back down into here, and then it's starting to consolidate below this level. Then the next support, support 2 is here. So then you can start to look for another down move. Well, first thing is you want to see it get to the morning low. Up below that, then the next support is on the bigger time frame. The next support, and so just using that. Not only are you leveraging the fact that I've been doing this for 20-something years, and I'm pretty good at identifying the spots where stocks will often have large moves off of, you'll also be developing a technique that you can do yourself in any stock you're watching, identifying important supply areas for support and resistance, and being disciplined about those setups. And you can systematize your trading more that way. And I think, there's 21 trading days in the month. Many people struggle to be positive 8 to 10 days. I think once you start going through that process, being positive 15 to 20 days becomes more normal. And it's just because you get so many of these setups over and over again, and so the probability is just work in your favor to have more positive days, as long as you're getting a bunch of setups and price levels each day. And so that's this morning meeting was more about giving a couple of insights more than just sharing the trade ideas for the day, which that's how it is normally each morning. Reserve the lectures, webinars, and things like that for this other stuff. But these things just presented themselves nicely. I was putting together the game plan this morning.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.